What is good, Tesla family? It's Ray J back with another video, and in this one I'm going to be talking about the one and only Tesla stock and what you should be looking out for the future. I'm also going to do a forecast of the future for Tesla and also the SPY and the overall market based off many factors that may affect them, and kind of break down these big factors out there that we really need to be watching to understand what Tesla may do for the remainder of the year. And before I break anything down about Tesla's share price for the next couple of months closing this year, I do have to mention a couple of things before starting. Firstly, I'm not a financial planner, so don't take any of this as financial advice whatsoever. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire Tesla community as a whole. And the last thing is, if you guys can, please check out the Webull link down below and in the description. If you sign up for Webull, the link down below, and deposit any amount of money into the account, you're guaranteed up to 12 free stocks, each worth up to $2,000. And the best part is, any of these 12 free stocks could be a free Tesla share. It's a limited time offer. The offer ends in just 2 weeks, so please check it out before they run out. With that out of the way, let's get on with the video. So looking at Tesla, I mentioned something yesterday that's very important in the video that came out. And that's the fact that we have the FOMC meeting approaching us very, very soon. And this is really affecting the way the market is kind of moving, at least for the short term. So what I anticipated was right now Tesla is showing more strength than SPY, and I do anticipate more chop to really come for the next couple of days until the 21st of September, when we will get a very, very clear, I would say, direction as to where the market may be headed. So right now, the market is fully priced in a 75 basis point rate hike, but we haven't fully priced in a 100 basis point rate hike. So the market is actually preparing for the Fed to be even more hawkish, but based off where we are right now and based off historical data, it seems very unlikely we actually get 100 basis points because it would actually hurt our economy. But if the Fed really wants to do that to bring down inflation, which should be one of their number one priorities, it still is a possibility. And that's the reason why the market is not necessarily in straight up the zone where we're just going to rally for now on. We still are going to remain kind of choppy until we get a clear direction. Now, I did mention it's very likely we get 75 basis points, and based off historical data going into the midterm election, the market tends to actually rally as we approach that big day. So with that said, when we have the midterms happening the first week of November, October could be more of a bullish month for the markets, at least I would say the second half of it, maybe like the last 3 weeks as well of October. They should be more bullish as we don't have an FOMC meeting for October, and we could see some pretty decent price action going into the election. Now, the real question is, all right, maybe we're choppy going into the 21st. Maybe it takes a little bit of time, and then going into October, we start to rally. Maybe, November comes, the elections come, then what happens after that? What happens during the middle of November going into December? Well, one thing to note is we have an FOMC meeting in December, and I really believe that where we actually go, if the market is truly going to go back to all-time highs, depends on inflation and also global situations. Now, right now, the global situations are not necessarily happening just yet. There is a lot of tension between many countries out there. We still have lockdowns potentially happening and other things like that, but they haven't actually really had the biggest effect just yet. What's having the biggest effect is inflation. CPI being very high. The latest report came out at 8.3%. And remember, energy came down, which is why the number went down. Otherwise, everything would have went up. So overall, it would have gone up if it wasn't for energy, which is a very, very bad sign for the markets. That's why the market did take a big hit. We are still seeing CPI at a very, very high place compared to where it has been historically over the last couple of decades. So with that said, we have to see what happens to CPI to really determine what's going to happen to Tesla for the future. And I personally believe that as time goes on, we will see CPI come down, but it's going to be very slow. Now, during the last quarter of the year, there are those months where we end up seeing really high demand for gas, really high demand for electricity when winter comes, and also more demand for many, many goods that could actually cause demand to go up, which is not necessarily the best for CPI. Now, real estate tends to actually die down in the winter, so that's the reason why it could be pretty good at the same time. But we'll have to just really wait and see how this really affects the data, because it's not just demand that's the bigger thing right here. It's also how the Fed reacts and whether or not it's enough to really start bringing inflation down. So if inflation does start to come down, guys, Tesla could rally going into the end of the year, and we could start to approach some very decent numbers from here. However, there is one thing that's a little bit concerning, and that is the amount of gaps we have in both Tesla and the SPY. Now, let me just show you them right now. So the first thing I want to talk about is this fib retracement. So what you'll notice is if you go from the bottom to the top and you look at these retracement zones, you could see that Tesla actually recently bounced off the 0.707 retracement after it didn't actually bounce off the golden pocket. We did get lots of like volume coming in right here when we entered it. And it really shows how psychological this tool, this Fibonacci retracement tool, really is and how it could actually be used. Now, if you were to use this on Tesla from its low that was actually made previously, let me actually use the daily chart for this. Right, where is it? Right here. So once we look at it, I want to mention something important. And that is the fact that the Fibonacci retracement kind of suggests if we don't necessarily break past 314 over the next like couple of weeks, we still could. But let's just talk about the chart from this standpoint. So obviously these numbers could be adjusted, but if we bring out our Fibonacci retracement and we start from this bottom, which is like about right here, and we come all the way up to the top, what you'll notice is the golden pocket happens to be around that 240 range, which is kind of like evidence that Tesla could come down here again if something were to happen in the markets. If CPI is still very high, if we get a big drop, if something happens involving Taiwan, it is still very possible. Now, if Tesla ran like even higher to some like really high number like 340 in the future, this number would be adjusted to like that 250 range, which is where the golden pocket is. That happens to be where this gap down here is for Tesla. So going into the end of the year, where we go depends on inflation, it depends on global conflicts, and it is possible for us to actually come down after the election to actually fill these gaps down here. It's a possibility. Am I guaranteeing it? No, but it is something you need to be prepared for, as Tesla has a gap down very close to like I believe it's like very close to 250, maybe 247. And also something else that's kind of concerning would be the SPY. Let me show you this. So the SPY also has a bunch of these gaps, and gaps don't always have to be filled, but they tend to be filled. At least a large majority of the time, they tend to be filled. When you look at SPY, guys, look at these gaps down here. The SPY had many of them. We actually filled a couple of them as we were coming down recently. The SPY is currently in the 380s. And if you look at it, we have a gap down at 376. We also have a gap down, let's see where it is. It's in the 360s basically, very close to the low we made. So what is going to trigger SPY to come down like this? Right now, it doesn't look like CPI will be the trigger unless it continues to go up, which is very possible. Now, another trigger could be something that happens involving Taiwan. We are seeing big issues in Europe right now involving their supply chains. Also, the demand for gasoline is just not necessarily meeting with supply yet. So it's also very concerning, and it's going to have a big effect on the USA as well. So we'd have to wait and see on those. What I'm seeing for Tesla is something like this. I'm just going to hypothetically like draw this out. Please forgive me because it's not going to be perfect. No one can predict the market perfectly given all the different factors that will really affect the share prices. So the market is moving based off inflation, based off these data points. If Tesla does come down a bit, it's holding up pretty well. It could come down kind of like this. Maybe we have FOMC that comes out. Maybe Tesla pushes down just a little bit after FOMC. We start to kind of like consolidate, push up around that 290 range. Then we get a bit of a balance and we start pushing as we approach the midterm elections, right? We slowly get a push up. Tesla revisits that 314 range. Maybe we break past 314. We start to kind of rip a bit. People become excited, and this thing goes to a pretty decent level going into that day. Maybe we push to like the 330s, maybe, right? It's very possible. But then after this is where it becomes very capricious because there could be political tactics used to kind of like throw a certain party under the bus if they end up gaining lots of seats, just for example. And what could end up happening is we get a bit of a drop after midterms. It's not guaranteed though, but it is a possibility. And we could end up starting to come down again. Now, whether we end up kind of like, holding these ranges and kind of pushing all the way back up through the end of the year, approaching the end of the year, it really depends on inflation. If inflation starts coming down very hard, going to like the next readings that come out, the next reports for CPI, Tesla could start pushing up like this. If it keeps on dropping and dropping and dropping, and Tesla could really, really start to rally as time goes on, right? However, what if CPI continues to remain like super high and then we get some big, I don't know, black swan events out of nowhere that the market doesn't like, right? After the election, maybe. What could happen is the market could actually also take a hit. Let's just say CPI is very high again. It's not coming down as fast as we want it. The Fed has to be hawkish again. We could see Tesla trade like this. And if we do get like a big drop before the year ends going into FOMC, we could see a move like this, guys. Tesla could come down and start filling the gap down here in that 247 range. Hopefully we get the bounce around there and then really start to rip by the next year after that and continue from there. Now, please note that this is just a hypothetical situation that everyone should be prepared for. And it's very possible considering what the market has been doing and what's going on with CPI and many, many things around the world. So please be ready for anything, guys. This is essentially what my outlook is. Where we really go depends heavily on CPI as of right now, unless some other thing comes up that is just as big for the markets. So that's really what's very important. I am very concerned and maybe very hopeful that nothing happens to Taiwan. That could be another big catalyst, guys. You have to be prepared. Not to mention the fact that when winter comes, we could get even more lockdowns in China, maybe even the US. I don't want to like count on that, but it is a possibility. You have to be prepared for anything. I'm hoping that CPI starts to come down. I'm hoping things really improve and we get a move kind of like this. I do think it's a little bit more likely, but in order for us to truly know, we have to look at the data on a monthly basis. Every few weeks, look at like PCE, CPI, look at what's going on with like the jobs and the Fed, and be very aware of what the news is saying when it comes to our financial markets, because that's what's really driving this market, guys. That's what's very important right now. Tesla has strong fundamentals. They're amazing. They can help the share price to a degree, but the bigger thing right now is the overall market, all right? At least for the short term. Over the long term, for next year, for 2024, 2025, I believe fundamentals will return as the biggest driving factor and Tesla will rip, going into those years to all-time highs many times over. And I'm still very bullish for the long term. For the short term, it still is very capricious. We'll just have to wait and see how it goes. I am still optimistic for the future nonetheless. Anyways, thank you all for listening. Enjoy your weekend. Remain calm, cool, and collected, and I will most definitely see you guys in the next video. Tesla to the moon, excuse me, because the long-term future is bright, and peace out.